Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Sonia and Nigel, and I have to start by saying thank God it's Friday. Morning, guys.
You know, you sound extra chirpy on Fridays. I'm sure Nigel will also agree with me on that. I mean, there's just
some enthu, right?
Fresh energy in your voice, but rightly so.
Rightly so. Nigel?
Let's hope it rubs off some bit onto the markets, because we're starting off on a dull note, I think so.
Slightly dull note, yeah.
I know the start is exciting. What about the end? How does Friday end?
Our Friday's a long one, huh? By the way, with the last show at 5.
Yeah.
All right, let's get the ball rolling. Let's tell you what's lined up in terms of the cues, right? What are we waking up to in terms of the US market layout? Because that has once again become important. I mean, we like it, we don't like it. I think markets will pay attention to what's happening. So that's the change on your screen. The Nasdaq was down about 1.7, 1.8%. The S&P 500 was down about 1.4%. The S&P, by the way, has closed a bit under the 4100 level. It's a key support for the S&P. It's a bit of a battleground area, right, which many have been watching closely. It's a daily close, but if we close once again today, it's a week. If it gets to a weekly close under 4100, then I think people will start to project perhaps a little more downside here. You know, the US session, the US market, by the way, has also was at least till last night, exhibiting signs of what we saw all of 2022, dip buying. I mean, just consider this. Excluding yesterday, in the past 19 sessions in the US, 16 out of the 19 sessions, the US market closed higher than where it opened, right? I mean, that is quite incredible. But yesterday, it kind of broke that pattern, and the market in the last hour swooned lower, and we ended sharply with cuts. So what happened in the US session? We had data which was once again strong. And now this is becoming a string of stronger than expected data. It started, of course, with that jobs data 2 weeks ago. We had the CPI numbers which came through, and last night we have the producer price index numbers, which also beat expectations, which then feeds into the CPI. We also had jobless claims which slid. I mean, they are at lows. And these are two things which the Fed watches very, very closely. We were saying this yesterday morning at the same time as well, that although we woke up yesterday to stronger cues, the debate is on. Skeptics will argue that maybe the market in the US has got blinkers on with the fact that data is coming in so hot, and the Fed will have to do more to curtail all of this. And I think, sometimes the reactions are a day delayed, 2 days delayed, but they surely do come. So we had Fed speakers once again. We had two of them. One is FOMC water, the other is not. And both sounded hawkish. They actually said explicitly, we'll play out sound bites in a bit. They said that in February, when they hiked 25 basis points, the meeting which has gone by, they said we should have done 50. So, this is what we are talking about. Okay, let's just come to the market here in India. For both the Nifty and the Bank Nifty, yesterday was disappointing because we had a strong start. We had a very good start actually. Good first half. The market, of course, was looking a little tentative, but then it completely lost all momentum by close. I mean, the Nifty ended 20 points higher. The Bank Nifty, of course, had it even worse. For the Nifty, a close above the 18,120 mark still remains elusive. The intraday high was, I think, 18,134. So we crossed this level on an intraday basis. That's where, a moving average and retracement level converges. So a close above that, I think, is still eyed. It's still elusive, as I said. Supports come in at the 40-day and the 20-day moving averages. The two levels are 17,952 and then 17,855, the 40 exponential and the 20-day simple moving average. These are levels to watch on the downside. Unlike the Nifty, Bank Nifty has still not been able to even cross the 40-day exponential. For that, I mean, the level becomes 41,846. It's not very far away. I mean, these are very near-term levels, important if you're trading day-to-day. But 41,846 is what you need to cross above to talk about further upsides. And for the Bank Nifty, supports come in at 41,158. So these are levels to watch out for. The cues from overnight are not all that positive, and I'm assuming the SGX is indicating a slightly weakish kind of start. There you go. It's down 100 points. 17,965 is where we are at. It'll be basically around the the 40-day exponential or the 20-day will open. If we get this kind of open by 9:15, you'll be around those support levels straight off the bat. Guys, hi.
It's interesting, right? I mean, everyone's expecting a rate hike from the Fed in the March policy, and I just almost had this moment where I thought I'll ask ChatGPT what the rate hikes are going to be. I mean, that's the way this whole ChatGPT thing has sort of blown up, right? Every question you have, you sort of just go straight there. I don't know how it's going to play out eventually, but I mean,
although ChatGPT only has information fed into it till I think 2021, if I'm not mistaken. So it will not have to. So it'll give you an answer saying I'm so and so. I only have data till before.
It can't do crystal ball gazing, is what you're saying.
Not yet.
ChatGPT, what's my salary hike going to be next year?
Oh,
that's a big one. All right, but I mean, for the SGX Nifty, of course, it's under a lot of pressure this morning, and that's the big question, right? The Fed rate hike is coming, and it's coming in March, perhaps. That's what the US was, sort of documenting as well. It was a weak handover. The Dow was down over 430 points, and as we were mentioning, the St. Louis Fed President James Bullard said that he will not rule out a 50 basis points rate hike in the March meeting as well. So the fight against inflation is not over just yet, and that's what most global markets are penciling in. But for our own markets, we're at a one-month high. The Nifty has been gaining for 3 straight days. There's been 5 days of buying from the FIIs. Yesterday, there was a large buy figure both on FIIs and DIs, but this includes that Indigo block deal worth about 2,300 crores. So, do keep that in mind. For our own markets, this level of around 18,000 has been a bit of a hurdle for a while. Let's see if we can break above it. For starters, at least, the starters on the downside. But the dips have been getting bought for the last many days. So let's see if that shapes up. For now, this 18,000, 18,100 level is a bit of a hurdle on the upside for the market.
Well, that's right, Sonia. And yesterday we came off the high point of the day, and it could be weekly expiry led as well. We went all the way to around 18,130, and from there we did see some profit taking. So yesterday you can attribute it to weekly expiry that played out. And today is on the back of global cues that we like to start off on the back foot. Now, the Nifty Bank or Reliance Industries, both of them will have to bat for the bulls if in fact we need to see a recovery. Today, the IT index that has been outperforming for the last 3 sessions, in line with what the Nasdaq has been doing, it could be a little bit off color today because the Nasdaq ended with a cut of around 1.8%. The first hour lows, crucial to track. If we can hold on to that vicinity of around 17,930 to around 17,950, the bulls will feel we have some bit of a hope, but crossing yesterday's high is going to be very crucial. The FIs in the FNO market, they got back to their shorting way. So they added close to around 4,500 short contracts. So the short positioning now is at around 74% odd. But on the option side, the 18,100 call, well, that saw a fair bit of writing in trade yesterday. But on the downside, the 18,100 put and the 18,000 put, both of them added close to around 45 lakh shares odd, telling you that there was writing at those levels. So today, given that we're going to start off on the back foot, let's see whether we see some unwinding at those levels. Keep an eye out on the 18,000 put in particular. If you start seeing some unwinding out there, that means that the bulls are throwing in the towel. Let's hope that doesn't happen. What are the levels you're looking at? Yesterday's high, that's the key resistance level in the near term. But on a closing basis, you like to end closer to around the 17,950. And I say that because the 18,000 put, that's indicating the 17,950 is very important. And the 100 DMA as well is indicating that. The Nifty Bank, well, the 41,200 has been a support for the last few days. Let's see whether or not that can hold out. If we could hold that level today, at least the bulls will feel that they have a fighting chance. SGX Nifty is suggesting a gap down. Track the first star lows and don't be very, very brave is my call today.
Okay, all right. Well, before we start the show, let's just tell you the SGX Nifty actually is at the low point of trade. But let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe, and Abhilash Narayan of Standard Chartered Bank will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Siddharth Khemka of Motilal Oswal Financial Services. But first up, on the equities front, we have a comment coming in from Lawrence Belanco of CLSA. He says they continue to focus on further selective gains in risk assets into the end of Q1. This growing selectivity continues to provide a number of tactical trading opportunities. In the US, the key action remains in the tech space, with the most interesting chart featuring the relative breakdown in mega cap tech versus unprofitable tech. On the currency front, Lawrence says the Indian rupee looks set for further weakness with the $86 to $87 upside target, and the dollar yen is set for a rebound back to 137 to 139 area.
Okay, well, let's get you some money market views now. This is Bhaskar Panda of HDFC Bank, who says the dollar index climbed above the recent range as US producer price index data came in higher than expected. The US yields also remained elevated. Oil remained range-bound, while Asian currencies remain a little pressured. In India, data showed that trade deficit had narrowed a bit, but the dollar continues to strengthen. Hence, he expects the dollar-INR pair to trade in a range between 82.65 to 82.85 to a dollar for the day.
All right, and on the bonds, Bhaskar Panda of HDFC Bank says the Indian bond yields remain range-bound despite higher CPI. He expects the 10-year benchmark to trade in a range between 7.3 to 7.35%.
All right, we have a lot of stock-specific action to track for you, and we get to that in just a bit in our special Top 10 segment. We're looking at Bharti Airtel, Reliance, Minda Corp, Recall, Schaeffler, Vedanta, Ultratech Cement, RailTel, and NLC India. Their stocks on the back of positive news flow. Given the kind of start we have, let's see whether or not they all open up in the green. On the flip side, you have Vodafone Idea that could potentially open up in the red.
Okay, all right. Well, let's get you some reactions to the inflation, the producer price data, etc. from Fed. I mean, the two Fed officials who spoke and who sounded hawkish. Listen in, and then we will get in Abhilash Narayan of Stancy for some conversation.
The job is not done. It could be more, but the job's not done. The inflation numbers are still too robust. It's not that there's no landing, it's just the landing has been postponed and maybe out there much further than anybody expects. The market so far has been wrong. The Fed is absolutely leading. They're doing what has to be done. I don't have any doubt that Jay Powell will stick with it, and the committee will follow. And he's got a good lineup behind him. Obviously, Bullard's on the super tightening side. I'm not sure he carries an enormous amount of weight in the committee, but I'm pretty sure the committee is at least going to go at least another 2 quarters.
The bond market, it often leads the stock market, and it's moving up in yield, which is not great news for stocks. And I think you add to it, the interest rate affects the PE, and of course the E is earnings, and earnings estimates are coming down. So feels like we're a bit ahead of ourselves in this equity market. Yeah, I think we're going to frustrate both the bulls and the bears this year and have a flattish sort of year. So far this year, we've obviously frustrated the bears. Maybe we'll have a chance now to frustrate the bulls. I don't think we're going much of anywhere. Inflation is still way above what the Fed would like it to be. Earnings estimates are coming down. Yield curve still inverted. Leading economic indicators have rolled over. Sentiment has moved way up. A lot of bullishness out there. So I think we need a pause.
Okay, so frustrating both the bulls and the bears. That's how the year could shape up. Abhilash Narayan, the senior investment strategist, Group Wealth Management at Standard Chartered Bank, joins us now to talk about that. Abhilash, good morning. Do you reckon that this could be a frustrating year for investors when nothing much really happens? It's absolutely range bound, and it could even be a time-wise correction for markets, including India?
Well, yeah, absolutely. I think this is a year where volatility will be quite elevated, and that's something we have been calling out, for the past few months. And if you look at what's happening in U.S. equities, it's a classic sort of bear market rally that we saw in the past few weeks. And now, given the strong data that's coming through, markets are treating good data or good news as bad news. So, it will be a choppy market, and that's why it's important to remain diversified as we go through the year.
Hi, Abhilash. Morning, Nigel here. Abhilash, JP Morgan's asset management strategist last night, I was listening to what she had to say to CNBC. She said the market is seeing an overheat before the retreat. Do you think that's going to happen?
Well, assuming that she's saying that markets could rally a bit more before stock markets fall, I think that's certainly possible, right? And on our end at Standard Chartered, we have been more cautious on equities, and the key reason for that had been earnings. So back in December, when we had our last chat, U.S. equities earnings expectations were at 6%. Right now, they're at 1.5% for 2023. And if you look at what happens to U.S. earnings in recession, so we did an analysis since 1960. On an average, earnings contract by 11% during recessions. And given the high likelihood of a recession in US this year, we think that there is more room for earnings to disappoint investors. So yes, in the near term, could we touch 4,200 for S&P? That's certainly possible. But we think that will be followed by a pullback or a consolidation as PE ratios will become more expensive.
I mean, it's crazy, right? US economy is getting stronger and stronger. And calls for a recession are getting stronger and stronger. It's just, So it's upside down, really. But that's how it's been now, at least for the last, 15 years, isn't it, Abhilash? What's your sense, though, in terms of emerging markets? How will... So there are two ways. One is, of course, if, we get higher rates in the US, which they'll have to do if, to cool things down. Is that more preferable? What does it mean for capital flows? Just a quick sense on EM flows in the context of what's happening overseas.
Yeah, so I think in the near term, obviously there is a possibility that the flows to emerging markets could suffer a bit because of any sort of risk of bout that we see, and the fact is that U.S. government bond yields are becoming more attractive at the margin, right? One of the key advantages emerging markets had was higher yields on offer, as well as stronger growth potential. So as far as the bond markets are concerned, we think that advantage is eroding a bit in some parts. But that being said, you also have to take into account the fact that emerging markets are much more advanced in their rate hiking cycles, and you could see a few emerging markets also start to cut rates this year. So the picture is a bit balanced as far as bond flows are concerned. If we shift our focus to equities, we think emerging market equities should still continue to see broad-based inflows, because one, the investor positioning is not that stretched, and secondly, emerging markets is where growth is. China, India, Indonesia, Malaysia, all are expected to grow in a robust manner. So yes, there will be some downbeat sentiment from US and European slowdown in the later part of the year, but money flows to where growth is, where potential for higher returns is. So emerging market equities should still continue to do well.
Okay, all right. We will leave it at that. Thanks a lot, Abhilash, for joining in. Although emerging market equities may continue to do well, what stays with me is, you're saying that you're still cautious on equities overall for the year. So I guess, that's the sum and substance of the discussion. Stay cautious on equities this year. Let's slip into a quick break. Lots coming up on the other side. Plenty of stocks in focus as well. Our entire research team will be here to prep us for the day. Do stay tuned in. Well, it's the last trading day of the week, and it looks like it's going to be a weak one, at least at the start. The SGX Nifty under pressure. But our entire team is here to help you with all the top stocks you need to watch out for today. So Rima joins in first up. She has some telecom data with her. Rima, how is it looking?
Hi, good morning. So the TRAI, which is the Regulatory Authority of India, the Telecom Regulatory Authority of India, they have released the telecom subscriber data for the month of May. And the picture is that on an industry-wide basis, the total number, the subscriber base has shrunk for the fourth consecutive month. And the problem is a consistent loss in Vodafone Idea subscribers. So for the month of December, it looks like this. Reliance Jio has added 17 lakh users on a month-on-month basis, which compares with 14 lakh users. There is a pickup that you are seeing. Bharti Airtel has also seen a pickup in its subscriber adds. 15 lakh users added in the month of December versus the month of November. Again, a pickup compared to about 10.5 lakh that they had added in the month of November. So both Reliance Jio and Bharti Airtel have seen a steady pickup in their subscriber base. The problem is Vodafone Idea. Vodafone Idea has lost nearly 25 lakh subscribers, and in the last 12 months, they've lost 2.4 crore subscribers, and this is the 21st month that Vodafone Idea has seen a decline in its subscriber base on a month-on-month basis. So steady for Bharti and Jio, but weak for Vodafone Idea. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, Nimesh joins us to tell us about the potential deal that's in the works. Minda Corp and pre-call in focus, Nimesh?
Yes, Nigel. So, you heard this in closing bell as well yesterday. I had alluded that there's going to be a big deal, and it's finally official now. So, Minda Corp is looking to acquire 15.7% stake in Precall. Do remember, this they are looking to acquire not from the promoters, but from the open market, from the institutional investors. So, the reverse book building was launched last evening. They're looking to acquire these shares at 209 rupees per share. I was looking at the shareholding pattern of Precol. It's widely held by institutions as well. So we need to see how much it gets participated. So and again, Minda is looking to spend close to 400 crores for acquiring this 15.7% stake in Precol. Three things to watch out going forward. One, how much it gets subscribed in the reverse book building today. Two, will Minda then go ahead and look to acquire the promoter stake as well? And if that happens, will it trigger an open offer as well? So a lot of things will get cleared in the next few days. But to start with, Minda is looking to acquire 15.7% in Precol via reverse book building today.
Okay, thanks a lot for that. I just want to mention that Precol has put out a release where they're saying that the promoters have absolutely no intent of undertaking any secondary sale, nor does the company have any intent to raise equity capital of any form, as the company has strong financial fundamentals and healthy cash profits that will meet the needs of capital for future growth. So, the promoters will not be selling any of their stake. As Nimesh was saying, it is, from the institutional guys that the stake buy will be done. But I just want to also mention that, Precol will be a great acquisition for or a great buy for Minda. It's a very strong company. It is the second largest player in the world in terms of instrument clusters. And, in India itself, Precol has about 50% market share in two-wheelers, 70% market share in commercial vehicles. It's also a debt-free company. And they mentioned that in their release that they did a lot to sort of, come to this position where they have free cash flow of 112 crores. They are debt-free. They had a debt of 100 crores last year. And the financials of the company are also very strong. So it is net a positive for Minda Corp. I expect the stock to be in the green, Precol as well.
Sonia, we spoke to the management in December of Minda Corp, and we briefly asked them, is there inorganic, acquisitions are on their mind? And if you look at it in the last 3 to 6 months, the Minda Corp stock hasn't done much. Precol is up drastically. Just pull up that 3-month chart out there. And just one more point, Precol is trading at around 24 times trailing earnings. Minda is trading at around 21 times odd. So let's see what's the clarification that comes in from Minda Corp, whether it will be EPS accretive going ahead, because actually Precol is trading at a higher multiple. So we'll keep an eye on both those two stocks.
Also, just one point, these instrument clusters, right? It's all in your car.
Yeah.
It's the display, the indicators, the telematics, everything that's present in a car. And now that's gaining so much ground because of electric vehicles.
Yeah.
So, Precol also provides all kind of connected vehicle solutions, whether it's telematics, onboard navigation, mobile screen mirroring, sensors. And this is an area that Minda wants to grow in. They're expanding in this EV space in a big way, and that is the main focus area every time we speak to the management. So I guess this is very synergistic for Minda. I'm expecting the stock to be in the green today.
But you're tracking another one as well, Schaeffler.
Yes, Schaeffler, very good numbers coming through, and I'm going with green over there as well. The margins are up 40 basis points year on year, and the revenue growth has been very healthy. Almost an 18% growth is what we've seen on the revenues on a year-on-year basis. The EBITDA, core EBITDA, has moved up to almost 350 crores versus 287 crores same time last year, and profit growth of 21% as well. So going with green for Schaeffler.
Okay, all right. Well, I'm tracking two companies, Ultratech as well as Vedanta. There could be some green on both these two stocks. For Vedanta, the government of Chhattisgarh, they're opened up a bid. And now they've declared Vedanta as the preferred bidder. This bid was for the auction of a nickel, chromium and associated platinum group elements block. So they have won that, and they've been declared the highest bidder with the final price of around 4%, price offer 4% that was submitted by the company. So that's about Vedanta. I mean, the stock could do well, but though the dollar index is stronger, so let's see how that reacts, because normally it's negative for metal prices. Moving to Ultratech, they have continued to expand. Now in fact they've announced the commissioning of the 1.3 million tons brownfield capacity at Chhattisgarh and 2.8 million tons capacity at Odisha. This takes the total capacity to around 127 million tons odd. So they've commissioned it, and they're on their way moving to around that 150 million tons target that they had mentioned earlier. But let's go across to Vivek. He's tracking a couple of stocks, RailTel as well as NLC India. Vivek?
Well, good morning. Some news flow on both of these stocks. So first up, RailTel, the company had received an order of a little over 33 crores. This is from the Bangalore Metro Rail Corporation, and this order is for the installation and the maintenance contract for IT network infrastructure. Also keep on your radar, NLC India, the company along with its JV partner has actually gone ahead and planned to set up almost 1,980 megawatt worth of thermal coal capacity, and this particular power project is going to come up in Nagpur. The company already has power tie-up for this particular installation that it plans to set up with the Uttar Pradesh as well as the Assam Discom. So also the company is also looking to go ahead and set up another coal-based pitted thermal power project of 2400 megawatt in Odisha, and for this particular power project, the PPAs have been signed with Tamil Nadu, Kerala as well as Odisha.
Okay, thanks a lot for that. Well, let's do a quick recap of all the stocks in focus. There's Bharti Airtel, Reliance, Minda Corp, Precall, Shefla India, Vedanta, Ultratech Cement, Railtel Corporation and NLC India. While stocks with negative news flow today, there's Vodafone Idea that we're looking at. But also let us talk about the commodity space. Manisha Gupta is joining in for a quick roundup of all the action there. Manisha, there is of course this expected rate hike, 50 basis points perhaps in the next Fed policy. What is the impact that all of this has had on the commodity markets overnight?
Quite on the bearish side, Sonia. So you have all the commodities actually trading in the negative as we've started a new Asian day here. So the crude oil prices have extended losses as longs unwind one. Sluggish near-term demand also seems to be weighing on. And as the IEA report says that 50% of all the demand growth that will come in this year will come in from China. And a big question mark there on sustainability of this demand is what is clearly weighing on. In the meanwhile, you have the U.S. crude inventories, which also have risen for an 8th straight week. But crude is not the only one. The U.S. natural gas is trading at a 2-year lows. The Baltic Dry Index now is hitting a fresh 2020 lows. You have the gold prices trading at 1-month lows, silver at 2.5-month lows. Palladium is trading at 3.5-year lows. Tin is trading at a 1-month lows as well. So while, of course, China is flagging stimulus measures and that could push growth, markets are not seeing those numbers come in right now. Jan was weak. Feb is expected to be a weaker side as well in sense of demand, and that's weighing across commodities. I think copper is the only one which will close this week in the positive. The rest of the base metals, precious metals, and energy will close this week in the negative.
All right, Manisha, thanks very much for that. We'll take a very quick break here. We'll be back. We connect with Siddharth Khemka of Motilal Oswal Financial Services for a chat on markets. We'll also have some earnings which are still pending. I mean, the earnings have come, but interactions are pending. So we'll be catching up with the management of PSP Projects to discuss their third quarter results. That conversation follows after the break as well. Okay, welcome back. Let's have the SGX Nifty quickly on the screen and see what that is indicating. Still a 100-point downtake, 0.5%, 17,969 or so is where we will start. Siddharth Khemka is now joining us. He's head of retail research at Motilal Oswal Financial Services with a sense on things. Siddharth, good to have you with us here. Thank you very much. Just give us some feedback, first of all, on what retail sentiment is like, Siddharth. Because, yesterday was a good day for broader markets, mid-caps, etc. But otherwise, the broader market has not been doing very well. And anecdotally, feedback is that portfolios are lower than what the benchmark index levels show. So just some feedback overall, briefly. Go on. Morning.
Yeah, good morning, Prashant. So, yeah, you have rightly put it. I think the actual retail client portfolio level, they're still struggling while the index is masking the entire environment by putting up a brave front. And if you look at, we are still at 18,000 levels. If you look at the earnings, I think sequentially, quarter on quarter, the earnings growth has moderated. The biggest challenge has been both in terms of the demand growth as well as a bigger issue of the commodity cost inflation, which has impacted margins. And that is what has impacted the broader market a lot. So you will have pockets, specific pockets where the earnings have been pretty good and the market has clearly rewarded those pockets. But by far, if you look at on an aggregate basis, that has not been the case. And especially if you some of the retail favorite sectors, the consumption space, that has taken a big hit in terms of demand as well as in terms of the commodity cost impacting margins. Now we are hearing commentary that things are improving. We are seeing the cost inflation coming off, but that is something that will follow up. Overall, if you look at the retail sentiments, I think they're still on the silence. A lot of stocks, portfolios, they are not reflecting what the index is reflecting. So they are on the sidelines waiting for things to improve. There is some portfolio churn, sector rotation that we are seeing. Incrementally, people are looking at some of the sectors like the capex theme, the budget presented. Defense is another theme which is picking up fast. People are looking at some of the defense names, infra, cap goods. These are names that is now picking up.
All right, Siddharth, hi, good morning. I wanted your thoughts on the auto sector because, you know, this year so far, the biggest gainers have been the auto stocks. Tata Motors is up 15%, M&M is up 11%, Bajaj is up 9%, and it's been a good comeback after a long time in terms of earnings, you know, good earnings, some upgrades as well. Any thoughts on what the follow-on buying could look like? Any stocks that you'd recommend?
Yeah, Sonia, good morning. I think if you look at the corporate earnings which just got concluded, two sectors clearly came out in the front. One was the banking and financials and the other was auto. The sector was reeling under a lot of macro level challenges, the supply chain issues, demand was weak, commodity cost inflation, but Q3 clearly helped them in both in terms of improvement in demand, some price hikes were taken, new models have been introduced, and that has helped the segment. I think the volume growth was seen across sector in the auto space, except for the two-wheelers. We are seeing the improvement in supply of semiconductor chip. There is a strong order book for the CV business, for the LCVs. And if you look at the passenger vehicle segment, a lot of new models have come out and we are seeing strong growth. So within that, I think our preferred pick is more towards the CV space where the penetration of EVs is being witnessed pretty fast. Two-wheelers is another space, but unfortunately, the listed entities are facing a lot of competition and challenge. So Ashok Leyland is our preferred pick from the auto space. We like the company. There is an improvement in numbers driven by the improving outlook for the industrials capex theme that is helping them. They are launching a lot of products in the EV segment that is looking good. So overall, Ashok Leyland, I think they led by recovery in the macro environment, pickup in construction, infra-led activities, mining, as well as growth in the replacement demand. As I said, Ashok Leyland is the best play on the CV cycle revival and is entirely focused on the domestic markets, where we expect a 61% PAT CAGR over the next 2 years on back of a low base, improving margins.
Okay. Hi, Siddharth. Morning. What do you make of Nestle's analyst call? You know, the numbers came yesterday, then they had that investor call. There are divergent views out there. Your take?
Yeah, Nigel, good morning. So I think the results were pretty much in line with our expectations, a decent set of numbers, given the backdrop that most of the consumer companies have been reeling under demand pressure and cost pressures. From the con call, I think clearly the company is set towards expanding the reach in the rural space that they have continuing, and that is helping them. Some of the new product launches has been planned. And the company has come out with almost 5,000 crores of capex plans over the next few years. That should be helpful. But if you look at current valuations and the growth, I think the current valuations at almost 56 times CY24 P is expensive and doesn't offer much upside from at least 1 year perspective. So we are currently having a neutral stance on Nestle.
Okay, neutral stance on Nestle, got that. There are very mixed reviews on Nestle in terms of brokerages, right? JP Morgan has an aggressive target price of 21,000 on the stock, while a couple of others are on the lower side. So we'll talk about that in greater detail, get you a piece on what brokerages are saying. But in the meantime, Siddharth, just stay on. We'll come back to you in a bit. PSP Projects is the first corporate on our radar today. Weak execution in Q3 led to a disappointing set of earnings for the company. They've exceeded their FY23 order inflow guidance, while FY24 revenue guidance has been trimmed. PS Patel, who's the chairman, managing director and CEO of the company, joins us now to discuss that. Mr. Patel, you know, I just want to first talk about what could be the reason for this subdued execution that you've seen in the quarter gone by, especially in, Uttar Pradesh. The projects have seen a dip in execution versus what was estimated earlier. Can you confirm if you have reduced your FY23 guidance by 100 crores from 2,200 crores earlier. And do you think this weak execution is something that could take place in Q4 as well?
Good morning. Actually, the weak execution, as I also declared on the call also, and this is mostly because the things are moving on the NEP side and the finishing side, and we are working at 7 different sites with 3 different types of PMC, and these calls are usually taken when it comes to finalization of the items. It goes to the central level of the government that all hospitals are being constructed at par. So some of the decisions were getting delayed. So that has created some loss in revenue on Q3. But yes, Q4, we are still hopeful that we'll be able to make up. But yes, as you asked, that will fall a little bit less, maybe 100 crore. And if that can be a little bit been compensated by what we have started is the Surat Municipal Corporation work, which is going on very fast. And we have just started last week only. So if we can create the 50 crore revenue from that side, that can compensate to our projected target of 2,200 crore.
Okay. All right. Good morning, Mr. Patel. Thanks so much for joining in. So you'll end this year at around 2,200 crores, which is a little lower than what you earlier guided for. But what is encouraging is your order inflow. Now, that's been splendid. I think earlier you were guiding for around 2,500 crores of order inflows. You've already crossed close to 3,500 crores. So two-part question. One is, what do you end this year with in terms of order inflow? And what does it take your order book to?
This present order book stands at 3,294 crore for this year. Yes, I already said that we should be able to reach to 4,000 crore because one of our lowest order is still under process at the government side, the government. And there are 2 or 3 small orders about in the range of 100 crore plus, which we are discussing since last 15 days, and maybe it can be converted into an order. So I'm still hopeful that we should be able to reach near to the 4,000 crore.
4,000 crores of order inflow, right, sir? Order inflow, yeah, 4,000 crores. And total order book will be?
Total order book as of now is about 5,000 crore. So if we can add this 400, 600 crore, it should end at 5,500 crore minus the last quarter of whatever we can generate revenue. That will stand at our quarter, start of the quarter year next year.
Sure. So this 4,000 crore order inflow, where do these 2 projects feature there, this Pandharpur and Bhiwandi project? That appears to be on a standstill. Can you give us a status check of that, on that?
Yeah, Bhiwandi projects, we have already been awarded arbitration and arbitrators are also appointed, so we'll be going for the claim. So now that matter is over and we have to wait till the arbitration is announced. And also at the same time, Bhiwandi Corporation has given this project to MHADA. So now that project may come again as a tender, but this time the tender will be much more than what it was, what we quoted at that time when it was 650 crore. Now the size has gone almost 3 times, so it will be somewhere in the range of 1,500 to 1,800 crore. So probably we may bid for that project also. And about Pandharpur, yes, again the same story. The financial crunch of the corporation is not able to clear, so we have asked for arbitration in that project also.
Okay, all right, Mr. Patel, let's get a couple of numbers then for FY24. You're going to be sitting on a solid order book. This year you'll end at around 2,200 crores of revenues. For FY24, what is the execution and the rough margin? I think normally you've been guiding for 11-12%. Could you confirm that?
Yeah, the margins we should be in the range of 11 and 12%. And next year, what revenue we can generate, I think it should be somewhere in the range of 20 to 25%, again reaching to 2,700 or 2,800 next year.
Okay, all right. Okay. I just wanted to ask you one more question, sir. Your order book, you said, will be around 5,500 crores. Split it up between private and government?
Yeah, it is about, presently the order book from the government side is about 52%. So 52% is government, 48% is private.
Sorry, 52% is government, you said, and rest is private, correct?
Yeah.
Okay. And can you tell us what is the current debt on the books now? What is the absolute number and any plans to reduce your debt?
See, presently our total debt, long-term debt is not more than 50 crore. And the short-term debt is about 140 crore, which is the CCDL which we are using from the total exposure of 1,047 crore, which we have including bank guarantees. So you can say that long-term debt is 50 crore.
Okay, all right. Okay, we'll leave it at that. Thanks a lot for joining in and taking us through the numbers as well as the way forward. The company is likely to miss their revenue guidance by about 100 odd crores, so keep that in mind. Siddharth Khemka is still with us, so let's get a couple of more views in from him. Siddharth, you know, the stocks that have had the biggest run this week, apart from the auto names that we discussed, is technology. In fact, Tech Mahindra is up almost 12% for the week. Has the time come now to put more money to work, not just in the larger guys, but even, you know, some of these smaller players, KPIT Tech, there's Persistent Systems, which is at a fresh high?
Yeah, Sonia. So I think the market is looking for value, and some of the names, especially if you look at IT, has been underperforming for quite a long time. But if you look at in terms of earnings, I think after almost 6 consecutive quarters of underperformance, the tier 1 IT companies have finally shown a growth which is higher of the tier 2 players, and they have outpaced. So that is something that is heartening. The results have shown that the resilience from the IT space and things could improve from here on. So we continue to remain constructive on the technology space, although on a longer term perspective, in the near term, the next 1 or 2 quarters, the results could remain a little bit more subdued, and that could come in between the stock price performance. So our preference within the IT space is mostly towards the large cap names. So we like Infosys, TCS within the large cap names. Yes, I think Tech Mahindra, HCL Tech, they are also doing better. Some of the smaller names, we are seeing a lot of interest in the market. Again, as I said, because of the sector rotation that is happening, and I think they would also continue to do good. But as I said, our preference within the tech space would be largely focused towards the large caps.
Okay, preference in large caps in the IT space. Siddharth, you know, some of these air-conditioned companies, whether it was Voltas, Blue Star, Whirlpool, Havells, you know, a lot of them, they disappointed in the past quarter. But in the last couple of weeks or so, you've seen a bit of a rebound in these stocks. Maybe ahead of that, you know, much awaited, or not awaited actually, it's going to be a scorching hot summer maybe. So some pre-buying will take place. Your view on these stocks?
So Nigel, I think much awaited for these companies, yes, but for us it could be a scorching summer. Some of these companies have got impacted again with the same issues. One is on the demand side, and two on the cost input side, both of which are kind of improving. And to match it with which we are getting the summer season, seasonality factor works very much strongly with the names like Voltas, Whirlpool, Havells, with AC, fridges, sales picking up. And I think after the underperformance, the valuations is also now comfortable. If you look at Voltas, the major disappointment came from the EMP business, while the core, the room AC segment, they continue to gain market share and show the leadership. So I think, yes, that's a segment where the market could focus on. Things could improve from here on, especially given if the summer is much hotter than expected and the sales for some of these companies pick up. We would like to play something like an Voltas, both in terms of if you look at the price point, which gives a good risk reward, as well as the momentum that we could see in some of these consumer durable names.
I don't even want to think about what summer is going to be like. If February is like this, where the heat is unbearable.
10 days back, we were all talking about
the cold.
chilly mornings and, you know, what.
It's called climate change. You know? It's real. Whether people want to believe it or not, it is real. All right, Siddharth, thanks a lot. We'll just come back in a bit, take a quick break. We have some technical suggestions lined up from our guests as well. Before we slip into a break, let's tell you what's lined up in the next half hour of the show. Anuj will be with us to give us a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. And before the markets open, in CNBC-TV18 Stocks Board, we will highlight the top stocks in the news to focus on for the day.
Okay, welcome back. The SGX, of course, is still unhelpfully down 100 plus points, 17,963 after a very dreary overnight session in the US. Anuj is here in the studios with a quick check on how he's seeing things. Anuj, morning.
Morning, Prashant. You know, this time yesterday we were discussing the disconnect between the bond market and the equity market, and I think markets finally realize that, there's clearly some really eerie cues coming out of the bond market. In fact, the bond yield has surged to 3.88. And while equities were so far ignoring it, I think it became too much to ignore now, especially with Mr. Bullard saying that there could be 50 basis point rate hike in the next meeting. I think that really is the fear. The big question is, will it translate in Indian market as well, or will buy on dips play out? Though, keep in mind, yesterday we slipped quite a bit from the highs, and we're still not out of that bearish channel, and the trend line decisively we're still not above that. Market's texture today will depend on how IT stocks behave, because the first hour you see an algo trade play out in line with the Nasdaq, and you'll see IT stocks down. And after that, will there be recovery in IT stocks? I think that's something to keep an eye on. The Nasdaq still about 20 and 50-day exponential moving average, but Nasdaq is like that. It just turns and sometimes sort of never makes a comeback. Could this be the same this time, or is this just a bit of a short-term reversal? I think that's something we'll keep an eye on. So as I said, any sign of recovery, it has to come from IT first. On the Nifty, the levels to watch, 50-day exponential moving average of 17,939 and 20-day exponential moving average of 17,885. My sense is that this is a support in which traders would try to buy and see if that trade is working or not. The Bank Nifty has been the weak link for the market, and it's been rejecting some important levels like the 50-day exponential moving average. And it's a sell-on rally sort of index. My sense is next level to watch here could be the 100-day moving average of 41,200.
Okay, thanks a lot, Anuj. Have a good one. Well, that is the market setup as we see it. Mitesh Thakkar of earningwaves.com, Shrikant Chauhan of Kotak Securities is joining in. Mitesh, what's the sense you're getting? You think this 18,000, 18,100 level can be conquered on the upside? I mean, the start will be weak, but where do you see it go from here?
I think... good morning. My sense is that, we've had a rally to about 18,150 and today we'll open gap down. Now, trading below 18,070 is slightly negative for me. So after the gap down, if we don't get a follow through on the upside, or if you don't get a bounce back on the upside, then I think, we'll start cutting down our long exposure and look at maybe identifying some short trades as well. Till now, we've been trading with clearly long bias, but I think today's gap down, if that kind of holds on into it and then there's more supply post the gap down, then I think it will change the short-term texture.
Good morning, guys. Shrikant, what about you? How are you looking at things?
Good morning, Prashant. Good morning, everyone. I think, the markets are very clearly in the range, and the way that we saw rally some few days back from the levels of 17,700 to almost 18,150, I think again 17,900 is going to act as very good support for the market. So there, if we see the market is falling, then we should look for adding some long positions with a stop loss at 17,800. We are of the view that till the markets are not breaking the level of 17,700 on the downside and 18,300 on the high side, we are going to see volatile activity in the market. For the Bank Nifty, the important support area is around 41,250.
What about individual stocks? What are you looking at, Shrikant?
Good morning, Sonia. I think, we should look for accumulating or maybe look for adding some positions in chemical stocks, because there we are seeing a lot of activity. In that, we like Navin Fluorine, which is around 4,300 levels. If we see any lower opening, then we should look for adding this stock with a stop loss at 4,200. We are expecting stock to move towards 4,500 or 4,600 in the near term. And a few pharma companies are showing some weakness in that. Sun Pharma, which is forming double top sort of formation, and it is trending lower. So from here, the stock can again fall to the levels of 970.75 in the near term. So Sun Pharma is still at current levels with a stop loss at 1,005.
Okay, all right, Shrikant, thanks for that. Mitesh, what about you?
Nigel, I have a mix of buys and sell calls. On the buy side is DLF, which had a good breakout yesterday. It's on a mild dip, say about 2-3 points. Buy with a stop at 364. A target of 385 can be looked at. And the second buy call is on LTTS, which is Larsen & Toubro Technology Services. Again, on a mild dip of about 25-30 points. Buy with a stop below 3660 for a target of around 3860. Two sell calls. ICICI Pru is a sell. Here I would recommend a stop just above 435 for a target of 412. And HUL is a sell with a stop just about 2545 for a mild decline to about 2485 levels.
All right, we'll take a quick break on that note. We'll come back with the pre-opening rates. Shrikant, Mitesh, thanks a lot for joining in. Also, we'll have Omkar Tangsale, the Senior Research Analyst at Axis Securities, for a discussion on the IT sector, which has been the biggest performer this week rather. We'll talk more about that in a bit.